Good afternoon, friends, and welcome. I'll be sharing live trades and results with you. We'll be evaluating how well these trades work out. We'll be benchmarking this against the S&P 500. I'm expecting to be outperforming it every month. Along the way, I'll also be sharing some lessons I've learned about investments, trading, and building wealth. And of course, the mandatory disclaimer. This is for educational and entertainment purposes only. It should not be interpreted as advice. And with that, let's get into it. Well, we're going to pick up where we left off. We had just an incredible trade here that took us into the end of May, I think into June. And so we're going to pick up right where we left off. You know, the market, so it's just 3 trades we're going to catch up on. But the market looked like it started to go back up. We went in right here, and you can see exactly what happened. For several days, it's moving in the right direction. You know, it's up and down, but candles like this are really difficult to navigate. So, you know, that takes our model out. It starts thinking about whether we're going to actually stay in or not. You know, it's hovering around that price. It dips lower. It bounces out on this day, which was June 11th. And we decided to take the exit. And one thing I want to kind of note is, you know, it looks like we're in for several days. This is definitely a loss, but, you know, the amount from where we went in, which is about there, is really not that far. So we're taking a little bit loss. You know, the market starts to recover, ticks up a little bit, ticks up a lot the next day, and we're back in. So we're looking again to see some sort of a trend up. We're not seeing it. The market again starts to fall. And we decide to take our exit on this day. So, you know, again, we're not taking big losses here, but we are taking some losses. The market is just moving against us. We definitely don't like these trades where, you know, even this first trade, we're exiting here, we're going in the next day. It's a little bit higher, and we don't like that, but it's only a little bit. Next one's up, definitely higher. You know, our whole game is we want to sell high, buy it low. That is definitely not happening. The next day, the market falls a little bit more, and we go ahead and we're in. We take a buy there, thinking there could be some uptrend, but it immediately drops, and we're out. So that was only a duration of 1 day. 3 quick trades. Well, I say quick. This one was several days. This was just a couple days, and this was just one. So maybe Adam's getting a little bit smarter and not staying in so long during this sort of crazy time. But let's head over to our tracking sheet and see how these did. All right, so we're going to be looking at these 3 trades. And I was out hiking in Hanging Rock, and this waterfall kind of reminded me of it because it just keeps falling. So let's go see what that looks like on our tracking sheet because we are definitely taking some losses. So the first of the 3 trades closed on June 11th. And we took a minus 1.76 loss. The S&P had fallen. Remember, I was saying like we're trying to buy lower, and instead we're buying higher and taking the loss. So we're more than doubling these. The S&P fell just 0.5%. We're falling almost 2%. So that brings our we had peaked around 34.9%. That was really good. The second trade closed on June 18th. The S&P gained a little bit. This is the one that really shot up and then dropped. So we definitely got clobbered on that one. This is sort of the risk of these derivatives. The only good news is here, these are small losses relatively, but it's just whittling away at our year-to-date gains, which now fell to 30%. The last of the 3, and I think the worst of the 3, closed on 623. The S&P fell almost 2%. We fell 3%. So not quite 2x, but definitely did a little better on that one in terms of the derivative SSO. But that brings the year-to-date buy and hold strategy on the S&P 500 8.15%. Not a bad year, even with the loss. It was a really nice run up the 2 months before. Our year-to-date, still doing pretty good, 26.38. Not bad, but we definitely lost about 6% through those trades. One thing that I'm watching too, I'm looking at the key metrics. We're only at about 48% win rate. Those are 3 losses in a row. On average, we're usually around 70 at the end of a year. So if I look back at the, 5 or 6 years here that we've been doing this, it's 70% is the win rate. So we're way below. However, our beat the market factor is looking pretty strong, 2.4, and as are some of these other metrics. So just for the year, I mentioned S&P is 8.15. We're 26. Volatility is about the same. Drawdown is about the same, -6%. We talked about the volatility here being, it is more volatile to trade the derivatives. They are 2x the S&P. So there is quite a bit of volatility, but that also means there's upside volatility too. So what I tend to see is when the market drops, we take all the drop. And when there's market gains, we definitely can outperform with the derivative SSO. So based on the risk and the return, that's what we're trading today. I don't go more than 2x. You can go 3x and do some crazy stuff, but 2x seems to work pretty good for Atom. If I look at our, now 5.5 year, what are we looking at? The S&P is amazingly strong, 14.83%, on the 5.5 years. We're at 24%. That's really good. And, drawdown, we're definitely, even on an annual basis, the drawdowns look really good for us. And again, I mentioned sort of the volatility gets a little bit tougher with the 2x, the S&P 500. Those are some of the metrics. Let's look exactly and see. So what does this actually mean in terms of dollars in an account? Let's take a look at that next. One. All right, so we've looked at this chart a few times, and what this is plotting is what is happening to our account balance over time. So if we had started with $100,000 when we started to do this trading videos, this is the starting point right here. Both accounts have $100,000. Because you saw like the return rates in the different years, one thing that's nice is we had about a 6% drawdown here, where the S&P is taking a much larger one. I think it was about 18%. So not losing money is half the game. If you can avoid these big drawdowns, you can see that, at this point, we're starting at a much stronger position than if we had taken the same drawdown. And here, the following year, you can see that, the curves are a little steeper. These line segments are a little steeper because we are kind of outperforming. We did have the one bad year here, which, I show you the good and the bad. There was some adjustments that Adam had made. We had a little talk after that year to see if we can't get back on track. And you can see, here's the sort of the slope of it since then and what the slope of trading looks like. So, what does this all mean bottom line? Why is this even important? Because if you had $100,000 5.5 years ago and you put in the S&P, you would be doing great. You have $213,000. But if you're following kind of what Adam's doing, you have about $340,000. That to me is, significant. And again, you can scale these numbers to wherever you're comfortable. I tend to use 100,000 because most people can probably relate to that number. 10,000 doesn't seem to mean much, and $1 billion. If you think about $1 billion, 2 billion versus 3. Now you're talking some significant money, but we do 100,000. This is exactly what happens to the account value if you're trading with Atom versus just holding it. So this is why we're in the game. And we'll have to catch up again on the next set of trades and see how we do. If the market continues to go sideways and we can cycle properly with it, we'll make some gains. And we really like that. I think those are the best trades when the market's falling and we're making some money. The last 3 trades, we are definitely not in sync with the market. So we're actually moving kind of the opposite. So we'll have to see how we do next time. That's it for today. How do you think we're doing? Please comment below and let me know how this compares to other investments you've seen. This is for entertainment and educational purposes only and should not be taken or interpreted as advice. Until next time.